Governments claim they work so that you can live more comfortably in financial terms. They tell you about growth, about how the trajectory is good, about opportunities. But if you look at the history of the past, you see that it is much darker. Governments have used hidden money games at every stage to keep ordinary people without wealth and to hold riches and power in their own hands. And unfortunately and surprisingly, these games are not new. They have been repeated for many years, only wrapped in change packages, sold under new names. But their purpose has always been the same, to move wealth upward and keep the poor dependent. Yes, now let's start with the oldest and simplest game: inflation. When a government spends far more money than it collects through taxes, it has two options. It either admits this reality and openly taxes its people, which is very dangerous politically, or it devalues the currency without waiting for anyone to understand, reducing the value of the coins and paper money in circulation. Ancient Rome mastered this technique. In the 3rd century AD, emperors faced with skyrocketing military expenditures began reducing the silver content of the denarius. A coin that was initially almost pure silver eventually became mostly copper, coated with a thin layer of silver. The empire claimed nothing had changed, but everyone who held that money paid the price. Inflation rose, fortunes vanished, payments could not be met. This was a silent tax on the public, a game still played today, except instead of imperial mints we have central banks. The Middle Ages used a different version of this game: forced loans. Monarchs in England, France, and Spain pressured wealthy merchants and guilds to lend money to the king. Of course, these were not voluntary. Refusing meant fines, confiscation of property, or worse consequences. Sometimes kings promised to repay with interest, but repayment often came late, with devalued money, or not at all. The government continued its wars and palaces, while merchants had no choice but to surrender their savings. The purpose of this game was coercion disguised under patriotism or duty. And this game worked for centuries. In the 17th century, the financial system itself became a game. When Britain established the Bank of England in 1694, it was not out of patriotism. The government needed money to fight France. Rich investors bought government bonds, and in return the crown guaranteed interest payments financed by taxes. This may sound like a fair deal, but who paid those taxes? Ordinary people through taxes on salt, cloth, and basic goods. The wealthy lent money to the state and earned safe interest. The poor paid higher taxes to cover those safe returns. This was a wealth transfer system dressed up as national finance. It made permanent a system that still exists today. The safest investment in the world is to lend money to governments, and those returns are guaranteed by the labor and consumption of the public. Jumping quickly into the modern world, the game is everywhere. Budget deficits, for example. Governments create enormous debts, and politicians tell the public it is for infrastructure, employment, or social projects. But a very large portion of the money goes to defense contractors and institutional donors. When payment time comes, governments prefer not to reduce top-level spending. They raise taxes, erode the purchasing power of money, or cut social programs. The game is this. Debt is presented as for the citizens, but the entire burden falls on the public, while the profit goes to investment holders. Then come the bailouts. During the 2008 financial collapse, banks took risks recklessly, packaged and sold dangerous mortgages, and brought the global economy to the brink of collapse. So who paid the price? Ordinary taxpayers and through massive government bailouts. And who benefited? The same banks, which came out of the crisis bigger and stronger. The game is simple: privatize gains, socialize losses, and tell the public it was necessary to save the system. Even the way governments handle pension and saving systems is a deception. Millions of people in America, Britain, and Europe paid into government-run pension systems, believing the money would be there when they retired. But governments often do not actually save that money. They spend it immediately and leave behind only an IOU, a promise. When the bill comes due, the cost is assumed to be paid by future generations. This is essentially an intergenerational Ponzi scheme hidden under official language. It works until demographics shift and the system becomes unsustainable. Then the government makes reforms, reduces benefits, raises the retirement age, or erodes the value of payments through inflation. Notice the pattern. At every stage, the game is built on perception. The public is told, inflation equals growth, forced loans equals duty, national debt equals investment, bailouts equals stability, pension cuts equals reform. Language masks the reality, a system that transfers wealth from the majority to the minority. And this game has worked for centuries because most people do not know economic history, do not understand the financial system, and recognize the trap only when it is too late. In recent years, the games have only become more sophisticated. Terms like quantitative easing, QE, were unknown to most people until 2008. Central banks created trillions of dollars out of nothing, buying government bonds and mortgage-backed securities to stabilize markets. They said it was necessary to prevent collapse, and it worked for the financial system. Asset prices soared, stocks, real estate, and bonds rose. But who owns most of these assets? The wealthy. For the middle and lower classes, the benefit was minimal, while the damage came through rising living costs and distorted markets. Another modern game, hidden taxation. Instead of increasing income taxes directly, governments collect indirect taxes through sales taxes, fuel taxes, and most importantly, inflation. When prices rise faster than wages, it is a hidden tax on savings. Governments love inflation because it reduces the real value of their own debts. But for citizens, this is the erosion of financial freedom. Your salary rising nominally may make you feel richer, but if your expenses rise faster, you are actually getting poorer. This is not a flaw of the system. This is the system. Even regulatory institutions are part of the game. On the surface, rules exist to protect the public, but powerful industries constantly influence these institutions. 19th century railroads, 20th century oil companies, today's technology and finance giants, all shape the rules in their own favor. The public is shown protection. Insiders see profit. War finance is also an old game in a new outfit. During World War I and World War II, governments issued massive bonds, selling them to citizens as a patriotic duty. Yes, people supported their countries, but these bonds were also risk-free investments for the wealthy, guaranteed by future taxes. The same pattern continued in the 21st century. The trillions spent on the Iraq and Afghanistan wars were financed by debt-benefiting defense companies, banks, and bondholders, while ordinary citizens paid the bill. Governments also use complexity as a weapon. Thousands of pages of tax codes, financial instruments, even experts struggle to explain. Budgets full of details. These make it impossible for citizens to track what is actually happening. Complexity is camouflage. In Rome, the game was visible in debased coins. Today, the game is buried inside balance sheets filled with acronyms. Why does this matter today? Because these games still exist, and are even accelerating. Inflation is eroding savings. Debt burdens grow every year. Bailouts are the first reflex when markets shake. Central banks continue manipulating the money supply. Governments shift costs onto the public in such indirect ways that most people cannot make the connection. The result: a society that works harder yet accumulates less real wealth, and an increasingly powerful financial elite. What history teaches is not only that these games existed, but that they return every time. When Rome debased its currency, citizens suffered. When medieval kings demanded forced loans, merchants lost their wealth. When today's governments rely on inflation and debt, the burden falls on households. Different eras, same mechanism. And the painful truth is, most people will never escape these games because they don't even realize they're being played. They think inflation is natural, taxes are inevitable, bailouts are mercy. They believe the messaging because they do not know financial history. And this ignorance is the strongest weapon of the game. When people forget the past, they cannot recognize its repetition. That is why governments and elites want a financially uneducated population. Financial education is resistance. Economic history is a weapon. If you know these games, it becomes harder to manipulate you. So what should you do? Look beyond the headline. When a stimulus package is announced, first ask who benefits. When inflation rises, remember it is not just bad luck, it is a policy. When a new regulation appears, investigate who wrote it and who benefits. Protect real value. Own assets that can preserve value even when money is being devalued. Do not assume the system serves you, because the system's job is to protect itself, not you. History does not repeat, but if you do not understand it, it will still crush you. The financial games that impoverished Roman citizens are the same ones shrinking your bank account today. Just dressed in modern words, the only difference is whether you recognize them in time. If this gave you a new perspective, subscribe.